Hello everyone and welcome to this week's Global Market Outlook. I'm Tolga. We have just come off a major rebound in the US equities, fueled by improving US inflation data and mixed signals on tariffs after a steep sell-off, and now we are heading into a holiday shortened week for the US. However, the global economic calendar is anything but quiet. We have a raft of key releases from China, the UK, the Eurozone and more. We will also see interest rate decisions from major central banks, which could shape market sentiment in the face of ongoing trade tensions. Let's jump right in. US stocks staged a comeback following the previous week's steep sell-off. The S&P 500 rose nearly 6%, the NASDAQ jumped over 7%, and the Dow climbed about 5%. Daily swings remained dramatic. On Tuesday, the S&P soared intraday before closing in the red, then posted its biggest one-day gain since 2008, the next session. Such volatility also spilled over into bond markets, with 10-year Treasury yields leaping from near 4% to 4.47%, a sizable move for fixed income. Tariff-related announcements continue to whipsaw sentiment. President Trump paused some of its Liberation Day tariff measures, though new or higher levies remain in the pipeline, particularly on autos, steel, and key technology companies. This back and forth produced sharp intraday moves in equities and commodities alike. Speaking of inflation, the good news is that inflation data showed a glimmer of relief, with the US Consumer Price Index falling to a 4-year low of 2.4% in March. Meanwhile, first quarter US earnings season kicked off, with major banks beating expectations. If the broader results hold up, it would mark the 7th consecutive quarter of year-over-year earnings growth. Gold extended its rally for the 5th time in 6 weeks, briefly surpassing $3,200 an ounce before closing around $3,250, up 7% weekly and more than 20% year-to-date. Oil, on the other hand, slumped to $62 a barrel, amid a mix of supply concerns and trade-related demand fears. The US dollar saw partial weaknesses but remains a focal point as investors watch for signs of safe haven flows via potential tariff impacts. Now let's look at the week ahead. While some regions observe Good Friday, it's a busy schedule globally, with critical economic releases that can shape the market narrative. Starting Monday, the focus is on China bright and early. We will get the March balance of trade numbers, likely around $77 billion after the previous $170 billion, along with Chinese exports year-over-year pegged at 4.4% and imports expected to drop by about 2%. All three data points will be in the spotlight to see how Chinese external trade is handling ongoing tariff tensions. Moving to Tuesday, we will start before dawn with the UK BRC retail sales monitor for March, a quick update on British consumer spending. Then we will stay in the UK as the unemployment rate for February likely holds at 4.4%, giving us a sense of whether wages are cooling off or still running hot. Around noon, we shift to the Euro area's ZEW Economic Sentiment Index for April, including Germany specifically, where confidence is expected to sink from last month's level. No surprise given the uncertain global backdrop. Later that afternoon, the US reports export and import prices for March, providing another clue as to how tariffs might be affecting trade costs. Meanwhile, Canada's inflation rate for March hits at the same time. The forecast there is 0.7% month-on-month, coming off 1.1% previously. On Wednesday, all eyes turn to China again for its first quarter GDP growth figure, expected around 5.1% year-over-year. We will also see March industrial production near 5.6% and retail sales at around 4.1% plus fixed asset investment. Taken together, these readings reveal whether or not the trade war has started to dent Chinese momentum. Later, the UK releases its March inflation rate, forecast down a notch to 2.7% from 2.8%. Then mid-afternoon, the US drops its March retail sales data, where the consensus is 1.3% monthly jump, along with industrial production and business inventories. If consumer spending remains robust, it might counter some worries stemming from tariff headwinds. Later, the Bank of Canada announced its interest rate decision, widely expected to hold at 2.75%. Thursday, we pivot to Australia for March employment data. Markets anticipate a rebound after February's surprise jobs decline, watching closely whether the unemployment rate edged up to 4.2% from 4.1%. By the afternoon, traders will follow the European Central Bank's rate announcement, where a further 25 basis points cut to 2.4% is on the table. ECB President Christine Lagarde's press conference could move the euro as she addressed growth risks and potential new easing measures. Later in the US, we will see a cluster of releases, building permits and housing starts for March, weekly jobless claims, and the Philadelphia Fed Manufacturing Index. These collectively paint a picture of housing, labor, and manufacturing trends in the face of persistent tariff drama. Finally, Friday starts in Japan with the March core inflation rate, which could rise to around 3.2%. That number might pressure the Bank of Japan if inflation remains stubbornly above the target. It is Good Friday in the US, so markets there will be closed, but investors around the globe will still digest any fresh data or trade headlines, particularly from Asia and Europe, to close out the week. A whirlwind of data releases this week will keep markets on their toes, especially in China and the US, as well as decisions from the Bank of Canada and the European Central Bank. Together, they will shape the narrative on growth, inflation, and ultimate impact of ongoing trade disputes. Expect further volatility and keep a close eye on how earnings, commodity swings, and central bank rhetoric drive risk sentiment. Thanks for watching our weekly global market outlook. If you enjoyed this video, please give it a like, share your thoughts in the comments, and subscribe so you'll never miss a weekly update. I'm Tolga, and I will see you next time.